Hi, this is Steve Davis over at Total Wealth Academy, and this is Learning the Lingo, a glossary of real estate terms. Today we're going to talk about the capitalization rate, commonly called the cap rate. Now, I'm taking a couple of minutes to explain it, but I've literally sat in 5-6 hour courses on capitalization rates, and I want to warn you, I was as confused after the class as I was before. The simplest way to understand the capitalization rate is this. It is the rate of return you would get on the property if you paid cash for it. If you had no mortgage whatsoever, that is the rate of return you would be getting on your money, because it is based off of the net operating income, or NOI. But the capitalization rate is also the rate of return that the bank would get if they had to foreclose on you. Why? Does a bank have a mortgage on the property? No, you have the mortgage. They paid cash for it, so they don't have a mortgage. If they foreclose on you, they get all of the NOI. So my argument is that the cap rate is determined by the bank. You could go to the bank, negotiate a deal, walk into the bank with a certain cap rate, and the bank would go, in many cases, no, the cap rate's too low. See what I mean? They're in control. They're gonna look at you and go, that cap rate's so low, I wouldn't loan money on this deal under any circumstances. You need to go renegotiate the deal and get what? A higher cap rate. Lower the price, get a higher cap rate. So the bank has a lot of control of the capitalization rate. So when you're looking at a deal, if the cap rate is too low, the bank's going to protect you, if you will, and not loan you the money. And you may be mad at them and this. Don't be mad. If they won't loan you the money, there's a good reason why they won't. Many people look at the bank as your enemy. No, they're your friend. They're like your third eyes. You've got your eyes, you've got hopefully a mentor, and then you've got the bank. All three should look at the deal and say it's a good deal. If the bank comes back and goes, wait a minute, no, we're not gonna loan you the money, that's good news. They kept you from overpaying for a property. So the capitalization rate, or cap rate, is controlled mostly by the bank. Now, the market has impact on it, of course. But if the market compresses the cap rates too much, the banks are going to stop loaning, and it's going to kill the market, and the cap rates will have to come back up. So there's a basic definition of the cap rate. Don't overanalyze it, because there are other things more important than the cap rate, such as your internal rate of return, your cash-on-cash rate of return, your equity multiplier. So we'll talk about all those in future videos. Thanks for watching.